Thanks for tuning in to the trade setup with me, Niraj Shah, and the big days here, the US election verdict. I think the biggest day for us is the Indian election verdict, of course, but this is big. And this week ahead, right, the next 3 days, big next 3 days. So November 5th, the US elections, the FOMC meet on the 7th November, the China NFP meet on the NPC meet on the 7th or 8th November. So therefore, there's a lot of global cues that we got to watch out for, which will have ramifications for global asset classes and thereby India as well. This is what the markets did though. Dow futures are marginally in the green after having a cautious day yesterday, and you don't fault them for this. This is the biggest thing for them in 4 years. So therefore they were quiet with a bit of a downward bias. Asia though is a sea of green. This didn't matter yesterday because Europe was in the green, but we were down because of idiosyncratic factors, particularly mutual funds led rule regulations maybe. So we are likely to start off on a flattish or a sluggish note, and this shouldn't surprise too many people. I think the setup around our markets has become a bit iffy. So, yesterday, viewers, multiple factors, including the new mutual fund circular, impacted markets. I'll take a minute here to explain what happened yesterday, or one of the reasons why this would have happened. That's because now there are new regulations that came into effect yesterday for mutual funds, wherein they can't go out and buy stocks unless there are certain rules and regulations around the bulk buying happening within a particular range of the total volumes done or the VWAP volatility. So there are multiple factors out here. We've written a small story on the NDTV Profit website around this, which might be an explainer for why this is important and what few fund managers had to say. So somebody said that this is not a risk, but certainly a more regulatory feature to adhere to. Difficult to take a firm view right now, but there are enough sell-side people that we spoke to who said that this could have been a principal reason as well behind the extreme volatility in trade yesterday. Simply put, if a large FI is going out and putting out a large sell order, mutual funds can't just go out and absorb that wholesaling if they feel like, even if they believe value, because it also got to do with a bit of the volumes that the stock is trading with, and are they within those adjusted ranges. So there are regulations out there which might have impacted trade yesterday. So that was the first thing. I firmly believe it's very unlikely to see any major sharp pullbacks ahead of the US election verdict and maybe ahead of Fed as well. So the next 2 days, I really doubt that we'll have a V-shaped uptick coming in, even if we were to see a downtick. So bear that in mind. But having said that, there are sectors that you should keep in mind for a probable pullback whenever that happens. So Mumbai property registrations and even NCR to an extent have seen very strong. October Mumbai property registrations were up 22%. Granted, it was a festive month, but it was positive, and therefore this may aid a recovery in realty stocks whenever this were to happen. So that's part one. And a lot of brokerages are turning very constructive on OMCs and select city gas distribution companies. So not upstream oil, but downstream oil, city gas distributors. There is optimism coming in because of the valuation comfort that is there. So do watch out for this pack as well. Okay, now what are the earnings slated for today? A clutch of important ones: Aptus Value as well as Berger Paints, CCL Products, excuse the typo there, CCL Products, Dr. Reddy's, Gale. There is JK Tyre, yes, but numbers that actually come out: Mankind Pharma, Mazgon Dock, and a few others. So I'll watch out for a clutch of these. PB Fintech also very important, as is Titan. So clutch of very important names coming out with numbers in the session today. What are the stocks to watch? Raymond is the first one. Now, the reported numbers look a bit off, by the way. So revenues are fine, up 122% at 1,044 crores versus 474 was that number. Margin picture too has looked okay. The point about Raymond is that the numbers without the demerged entity of the lifestyle business, the net profit would have been 59 crores versus 28 crores. Right now it looks 59 versus 161, but that is an anomaly because the one-time profit of lifestyle business, which is demerged, in the corresponding quarter last year has been taken. If you leave that out, the actual numbers are 59 crores versus 28 crores, 110 percentage point uptick. So do watch out for Raymond in the session today. as well. So that's the first one on my radar. ABB is the other one on my radar. Decent numbers, revenues up 5.6%, PAT up 21% because margins expanded 273 basis points at 18.57 versus 15.84, in line with what they did in Q1 as well. But the revenue number was a bit soft, but I would reckon that this number should support the stock. So watch out for this one. Bata India is a bit of a mixed bag. Revenue is up 2% at 837 crores, in line with estimates. Margins at 20.9 versus estimated 21.4. And net profit for Bata was weak as well. So Citi says that the growth and profitability remains weak, and they have reiterated a sell. The target price has been lowered to 1,050 from 1150. Well, so this one could come under a bit of a cloud. JK Paper could come under a bit of a cloud as well. Revenues are up just a 2% uptick, but the margins collapsed. 15.7 versus 24.7, imagine that. And as a result of which the net profit was down 58%. Very likely JK Paper could have a negative reaction today. KEC, expensive stock relative to its historical standards. Largely in line on the revenue front. On the margin front as well, if you see 6.3 versus 6.6, you could argue it's in line. The net profit slightly lower than estimated, 85.4 versus 105 crores. But it was up 53%, of course. So strong quarter, slightly below estimates. Let's see if the stock reacts negatively or no to this. Tilak Nagar should react positively. Revenues are up 9.7%. On margins, from 13.4 to 17.6%. And net profit up 57% at 58 crores versus 37 crores. Very strong show. Tilak Nagar Industries could do well. PNG Healthcare could do well. Revenues up 3%. Margins expand from 29% to 36.4%. And net profit up 26%. Again, a decent set of numbers by PNG Health, though the top line wasn't the strongest. So I do think that Tilak Nagar could have a decent day because the expectations are that with the Andhra Pradesh liquor policy coming out, stocks like Tilak Nagar, Allied Blenders, all of them, but these two in particular, could actually have a decent outing. So do watch out for Tilak Nagar. You will hear the management on our channel at 9:30 or 9:45, one of the two timings today. So do watch out for that. NSC had a decent outing as well, 57% uptick in profits, total income up 25%. Not listed as yet, but a lot of deals in the private markets just thought should bring it to you because some of you might be investors here, or exchanges are doing very well, capital market players. Last but not the least, there is a note from Citi on oil marketing companies. Remember I was telling you the trade setup that brokerages are turning constructive on them? Citi is one of those. So they have initiated a 90-day positive catalyst watch on HPCL, and they say that the weak Q2 earnings were driven largely by non-recurring factors or one-off factors, and therefore the risk reward is significantly more favorable, and this is an attractive re-entry point. More importantly, they are constructive on HPCL. Most importantly, they see reduced likelihood of a sharp fuel price cuts happening, and that is a big trigger as well. So HPCL is where they've opened a positive catalyst watch. They already have a positive catalyst watch on BPCL. So do watch out for these. Could be interesting. MK2, Nirav Shah had come in and said that this is the best bet for the near term. So do watch out for oil marketing companies. They haven't performed well in the last 1 month. Could be interesting. Is there something else that you should be watching out for? Very quickly before we wrap up, there is, there are stocks like ABB. They say miss, so Nomura I think is saying, or HSBC saying that there's a miss on order inflows and execution, but margins are strong, which is actually a positive thing. So bear that in mind. Apollo Hospitals, Morgan Stanley is an overweight, so watch out for that one. There is a note from Macquarie on Sun Pharma, wherein they're saying that Lexilvi delay is baked into our base case as well. And Citi has a note on Indian media. So those are a few names that you want to watch out for. IRCTC, Investec has a buy. The target price is 45% higher than the current market price. Maybe watch out for that one as well. Thanks so much for tuning into the Trade Setup.